And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and without further ado, let's jump right into Bitcoin today. It's been a while since I last covered price action, so we're primarily going to be focusing on price action. Now, I understand that the market is still rife with fear, and rightfully so, because right after the FTX debacle, it's been like a wave of negative, never-ending negative news, because we had FTX and we had BlockFi coming out to say that, hey, they're going to be stopping withdrawals. And then there was a FUD around was at crypto.com, as well as now there's FUD around GBTC and Grayscale. And so I'm not sure what the developments on that are, and perhaps Sean and I can look into that a bit more and cover it on one of the live streams. However, people are still anticipating 13K Bitcoin. Let's go and see where 13K is. Let's smack it right here, which is from where price is at right now, all the way down to 13K, is another 20% to the downside if we actually see that come to fruition. However, based on my last video that I'd put out there, I spoke about this phenomenon called groupthink phenomenon, right? And I told you guys that if you fall victim to groupthink phenomenon, you are going to miss out on signs of what the smart money is doing, because the smart money guys, they take advantage when there's blood on the streets. And right now, this is the definition of blood on the streets. Right? So it's about really understanding when the smart money will be pouring in, whether or not they're here right now, whether or not they're positioning, because if you fail to see those signs, you are going to miss out on some very, very good opportunities. So today, while I'm going to implore you to not fall victim to the groupthink phenomenon, I'm also going to tell you at what point can you truly expect 13K to be on the books. Okay, so that's going to be our essential focus of this video. Now, before I get into the meat of that, I'm going to implore each and every one of you to smash that like button, because it goes a very long way for the channel. But hey, if you want to wait till the end of the video to see if you manage to derive any good insight from here, then by all means wait till the end. But yeah, the like button goes a long way. So with that, let's jump in. And now, in addition to all of the crypto negative news, that's one part of it. Right? There's another thing that's come up, which is, turns out Jerome Powell will be speaking ahead of the FOMC meeting. Okay, so he's going to be giving a speech. Now, I'm currently on the federalreserve.gov website. Jerome Powell, as you can see here, on Wednesday, November 30th, is going to be giving a speech on the economic outlook, inflation, and the labor market. Now, I'm not entirely sure if this was a sudden speech that came up. It was very impromptu, and it's been added to the books. However, if that's something that you are aware of, whether or not it was an impromptu meeting that was just announced, let me know in the comment section below, because that will suddenly make this a lot more interesting. Because what you guys need to understand here is that besides Bitcoin, now Bitcoin did have a Black Swan event, right? We can actually look at the FTX debacle as a Black Swan event where we actually broke down. However, what happened to the rest of the markets, and I'm talking about the traditional space primarily, is that if I take you guys on over to SPY, okay, this is what SPY is doing. Now, while Bitcoin dumped, SPY actually rallied. And why did it rally? Because right after the FTX debacle took place, we actually had the CPI print that came out, and that CPI print, guys, was a positive. It was a positive outlook for the economy. It was in line with what Jay Powell wanted to accomplish. He wanted to bring down inflation, so that CPI print was in line with inflation actually coming down. So on that news, SPY actually rallied from here. Right? However, now people are speculating that Jerome Powell is not happy with this rally. He is not happy at all. He's actually looking at assets rallying in a still inflationary environment based on one print that came out. Okay, so now the speculation on the street is that Jerome Powell on November 30th is going to come out with a more bearish posture. Okay, he's going to come out and say that, yo, listen, guys. You guys are all very positive. SPY is rallying. However, I do not intend on decreasing rates anytime soon. We intend on keeping rates up, so I would not get too excited if I were you. Essentially, what Jay Powell has been doing over months now is that he's been promoting forward guidance. He's been coming out with his bearish/hawkish stance to control inflation expectations. right? And that's why every time, based on what Jerome Powell says, people are hanging on to every word and the market reacts after every meeting. So once again, what he's going to come out to say on November 30th is going to be important. Alrighty, because if he comes out being bearish or hawkish, as people would call it, if he actually comes out being hawkish, telling us that, hey, rates are going to stay up, we can actually expect SPY to get another move to the downside. Okay, so now this is what the traditional is doing. Yes, this is going to play a part in what crypto is doing, because right now it just appears that everything is sort of tethered in a way. Now, if I take you guys on over to Bitcoin's chart, what you guys need to understand is that, yeah, okay, you know what? Bitcoin did have a black swan event that took us all the way down to 15.9K. However, 13K is only going to be on the books, contingent on the technicals actually playing out, contingent on Bitcoin actually breaking that region of support at around $15,986. So now the main question is, can Jay Powell or even the FOMC meeting actually get Bitcoin to break that region of support and take us all the way down to 13K? Now, I feel like if I put in a poll on that question, I'd get a resounding yes that, yeah, Jay Powell is going to take us down to $13,000. However, it's not going to be that simple. When you have price action on the chart, let price action guide you, because it's going to give you a better, clear picture on what price might actually do. That way you're prepared on both ends. Okay, so now right off the bat, the weekly, what you guys need to understand about this current picture, it's very important, the weekly time frame, is that we're still on support. Guys, $15,986. If you guys want to go ahead and take note of that number, go ahead and do so. But we've been holding that region as support for 3 weeks now. We're running on the 3rd week. Okay, and this was the region that I'd presented to you guys on the Discord chat before price even got down here. I told you very clearly that, hey, this is the next key region. Right? For us to even anticipate $13,000, we first need to break this. I'm looking for a close, guys. That is going to be a confirmation. Okay, but now, can we get a sign on price actually breaking this region to the downside ahead of time, right? Before the weekly even closes? Well, for that, let's actually get on over to some of our lower time frames, because I feel like the party is happening on the lower time frames. So right now, I get it that everyone is looking at this bear flag, right? I mean, it's abundantly clear that this crazy bear flag inducing more fear than is necessary. But what's very important to note about the bear flag is that we have not triggered the bear flag just yet. Okay, what's going to trigger the bear flag is if we close a daily candle underneath this wick low right here. If you guys want to take note of this number comes in at around $15,479. Okay, if price actually comes all the way down to take out that wick low right there, that's when we trigger that bear flag to the downside. At that point, I will be anticipating 13.2K on the books. That should be a good 20% from that 15K region of support. Let's go ahead and check that out, okay? Very quickly, that's going to be a good, 17% to the downside. With that, now we're seeing that, okay, you know what, this daily candle is not looking too good. The previous daily candle was an indecision candle. As you can see, we had like the little doji, and right now the bears are winning the fight on this daily candle. However, if I take you guys on over to the 4-hour time frame, let's go ahead and check that one out as well. One thing you guys need to understand about pivotal junctures of the market is that, for one, when major trends actually turn, right, when we turn from a bear market to a bull market, that takes a considerable amount of time. Very, very rarely would you see markets turn in a fortnight. And most general turns in the market usually take considerable amount of time, and your lower time frames are going to be important here, because you want to start seeing trends build on your lower time frames and then cascade on over to your higher time frames. And that's why, even if you're not trading the lower time frames, I suggest like keeping one eye on it, okay, at all times, to see what who's winning the fight there. Is it the bulls or the bears? You want to see trends being established. So far on the 4-hour time frame, it's looking a bit choppy in this region. It looks like it's actually putting in a head and shoulders pattern, right? So this is the head and shoulders pattern. And I mean, based on price action, it looks like it's putting in a head and shoulders pattern. But I'll say this, I'm not seeing volume confirmation on the head and shoulders. Okay, so that's one thing to note. What I will be falling to instead is the mango dynamic. Okay, you can see that price is currently holding the mango dynamic indicator as support underneath. The region of support comes in at around $16,436. Now, I think that this is going to be a very, very important picture. And why is that? Because now, guys, if I take you guys on over to the mango dashboard, okay, I'm currently on the 4-hour time frame on the dashboard. You can see that Bitcoin USDT is currently long. Okay, long equals bullish. We got the signal 2.6 days ago, right? And yeah, we haven't turned that just yet. The volatility as well is flashing 16, telling us that the volatility is super compressed. The next volatile move might come to us sooner rather than later. Okay, and usually I lean to the side of the trend that I'm seeing on the dashboard. Right now, it's long. And now another key component that I'm seeing on the dashboard is this, guys. Look at the flags that have gone off. Okay, we still have a prevailing death cross on the chart. However, the dashboard is also now telling us that there is potential bullish divergence on the 4-hour time frame. So this is a very interesting picture. Because now if I get on over to the chart, put on my oscillators, let's go ahead and look for that potential bullish divergence, okay? I want to see when it triggers. That way you guys know too as to when to expect a bullish move to the upside. So I believe this is the divergence call. Okay, from here, and as you can see, so now we have an upward slope on price and a downward slope on the oscillator. However, it has not confirmed just yet. What will confirm this bullish divergence is if price within this 4-hour candle takes out this wick high right here, which I think we have taken out. The wick high came in at around $16,487, and this wick high came in at around $16,495. Okay, this is not too bad. So I think if price closes like this, that would sort of trigger the bullish divergence to keep your eye on. Okay, what we do not want to see within this 4-hour candle is if price actually closes underneath this wick low right here. Taking out this wick low will negate the bullish divergence. So that's something to watch out for. Now, in addition to this, I'm seeing something that could add to the bullish pressure on the chart. Okay, and that can be found on the funding rates. If you guys go ahead and look at the funding rates across the board. Now, I'm currently on CoinGlass. Now, CoinGlass has this thing where they show you funding rates for perpetual swaps, and they go on to tell you exactly how to read the funding rate. Now, I want you to ignore anything that you see on this. I'll link this below anyways. But I have a better, more kick-ass resource for you guys to understand funding rate extremely well to really derive good insights from it. Okay, because when it comes to these sort of pieces of information, you want to derive the best insights possible. You know, the thing about when people explain funding rate is like they're too black and white, they're too binary about it. You cannot be binary about it. You cannot trade it in a two-dimensional way. It's not bullish/bearish and take the trade according to that. No, there's a multi-dimensional way in which you can actually look at funding rates. Now, Sean has done an excellent video explaining that, and he's done so in layman terms. It's very easy to understand. I will be linking that above as well as in the end of this video, so definitely go ahead and give that one a watch. But right now, we're seeing the funding rate for Bitcoin, right? They're all negative. Okay, we're going to focus on that first row. Bitcoin, funding rate across is all negative. Negative. We're going to focus on the USDT/USD margin funding rate. Now, for those of you who still do not know what this is, bear with me. Let me explain to you what we're seeing here. Is that across exchanges, okay, this is showing us the funding rate across exchanges. Essentially, they're looking at all the leveraged long positions, okay, all the leveraged bullish positions, and all of the leveraged short positions. And when the rates are negative, it's telling you that there's a lot more shorts than longs in the market right now, okay? And not just that, when the rate is negative, in this case, all the leveraged short positions are paying all the leveraged long positions. Okay, all the shorts right now are paying the longs. Every time you see a negative, it's when the shorts are paying the longs. If it's positive, like it is on OKEX, I don't know why, this on OKEX, the longs are paying the shorts. But now the prevailing equation across the board is that the shorts are paying the longs. Now, what you need to understand about this is that if I take you guys back on over to the charts, if price actually rallies from here and if we get that confirmed sort of bullish divergence play through, right, price rallies, that is going to add more pressure on the open short positions because now not only are they paying fees to the long positions, but now they're also losing out on their position. They're suddenly in a very tight spot. So what happens there is that they're going to start letting go of their short positions. Now, to close out your short, you're going to have to buy back. When you buy back, that's going to add a bit more buy pressure on the market. Okay, so that's something that we can watch out for. However, I'll be waiting on this 4-hour close. Once again, do not jump the gun on this, right? For this to turn around and for us to anticipate a bearish move to the downside, I'll be keeping it very, very simple for myself. Put on the Mango dynamic indicator, okay? As soon as we close that 4-hour candle underneath $16,436, I will be looking for price to come down. At that point, I'll be anticipating this wick low to get taken out as well. Okay, take note of the number if you guys want. For those of you who do not have access to the Mango dynamic indicator, the dynamic support on the 4-hour time frame comes in at around $16,436. The next major region of support, once again, 15,986, in line with that weekly time frame. It's only if on the Sunday close we lose 15,986 to the downside. Okay, we close that candle underneath that region. Only then will I be expecting 13K on the books. Before that, understand that you are jumping the gun. And if you intend on jumping the gun, make sure that you have your contingencies in place at all times. What is your plan if price bounces on you? Do you even have a plan? Right? So ask yourselves those very, very difficult questions and make sure you note down your mindset as well as your plan for if the trade goes against you. Right? That way you can execute ahead of time without panicking. That is going to be key. But right now, I say watch out for that 4-hour divergence, because if the 4-hour divergence plays through, the shorts are likely going to get squeezed out of their positions. That's going to add to more buying pressure on the chart, which will take price up even further. I think the bulls actually managed to take control if we take out this level right here, coming in at around 16,651. I'll be looking for a daily candle close over that region. 16,651 will send price rallying back up to around $17,310. Okay, keep it simple for yourself, but right now this is what price action is doing. I suggest do not jump the gun, do not fall victim to the groupthink phenomenon, and yeah, stay mango, stay calm. If you're finding it hard to stay calm, come on in, join the Discord chat, and we'll keep you calm. We'll all be calm together, and we'll all sort of share our insights together. Now, I hope you guys enjoyed this video. I will be linking the funding rate video, as I had mentioned at the end here, so make sure to go ahead and check that out if you want to learn more about funding rate and how to extrapolate the right insights from there. And hey, if you like the video, make sure to smash that like button because it goes a long, long, long way for the channel. And I will see you guys in the next video with this trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.